Hey, everybody. Hopefully, you're having a really nice weekend, getting some fun in, getting some rest in, watching a little football if you're a football fan like I am, and just catching up on maybe some analysis on stocks that you think are interesting. Maybe you're sitting on big gains and you have to take a look and see, hey, do I need to start selling some stocks? Because I'm sitting on really nice gains, and when will the party end? When will stocks begin to sell off? Well, we don't know exactly, but I bet some of you are thinking that. We have a really nice community of like minded investors going, and I wanted to tell you about it. We've got a Discord going for members. We've got this live stream where members come on the live stream, suggest stocks to review, ideas that they have on stocks. And I wanted to tell you about it and, give you the opportunity to know how you can get involved beyond just being a subscriber. So take a look. You could go to the home screen of my YouTube channel, click the join button, and you can see the different options. Things like you can be invited to member calls. You watch member only videos that I produce, several a week, probably 5 to 6 videos a week. So you could also upgrade to like super investor level. You could give me a company. I'll do full analysis on it. We'll have a one-on-one call. And even the platinum investor, you can give me 3 stocks that I could look at in a given month. So different levels for different investors. Take a look, see if one of the options is good for you. And I appreciate that. What are we going to do on this stream? Well, we're going to take a look at stocks that are trending, and we're going to look at stocks that are nominated. If you're a member, put a stock in the chat that you're interested in. We'll take a look at it. If you're not a member, no big deal. $5 super chat, and I will take a look at it. Looks like we've got a good number of people on the stream already. Pierre, thanks for joining. Herdo, great to see you. Ben 10. You want to take a look at CDLR. Look at that. We've got our first stock up, CDLR. Not familiar with it? Happy to take a look at it, Ben. Give me a second here just to get my bearings straight, and then we're going to jump into CDLR. So stocks are thriving. If you're in the right stocks, you're having a phenomenal year. The big caps are doing really well. Broadcom is up 48%, NVIDIA 31%. Google has really taken off over the last 60 days and just created really, really good appreciation for investors. I should know I own a lot of Google shares. And Meta is doing really well. We also have some smaller caps that have been doing really, really well. So it's where you're invested and how you invested. If you're in United Healthcare and you bought, during the dip, you're doing quite well, as an example. Uber is up 63% year to date. Look at that. So there's some real winners out there, and hopefully you've got a good number of those in your portfolio. But the small caps have just been cleaning up lately, by the way. The small caps that have come up in the channel have been really, really good. So there's some stocks making some noise out there. The ones that are trending, for some reason, British American Tobacco keeps trending high on this stock analysis website. NVIDIA, Oklo, which really went up on Friday, something like 28% or 38%. Tesla, Intel. This group here went up 363% on Friday. It's a very small cap, and it went up tremendously, obviously. So we can take a look at some of these after we get done with the requests that are out there. So we have our first request out there. Let's take a look at it. And the company is CDLR, nominated by, I think it was Ben 10. So CDLR, what do these guys do? Cadeler AS, together with its subs, engages in offshore wind farm installation operations, maintenance services in Denmark. The company engages in the transportation, installation, and maintenance of offshore wind turbine generators and platform top sides and substations, maintenance of offshore structures and platforms. Okay. So this is like an engineering construction company. All right. Let's take a look at their website. So this is what they do. Now, engineering construction is not my favorite, industry or type of company. They tend to have really good growth spurts, and then they have a tough time sustaining those growths. These guys have specialization to work on the ocean and grab that air and then use that energy that is being created and take that energy to where it needs to be used. It is clean energy too. They're not creating emissions out of that energy, so that's a pretty good idea. This is a small cap, 1.83 billion. The company, I forgot to check, where are they headquartered? They're headquartered in Denmark. Okay, got it. Revenues of 546 million, and PE ratio is really low. Construction companies do not get very high PE ratios in my experience. Let's take a look at the growth. Now they have been booming. Look at that. Wow. Incredible. The trailing 12 months, the business is really growing. So Q2, 233 million. And compared to the previous year, they were just at 63. So yeah, it's growing really fast. Amazing. This looks really good. So what's this stock been doing? Let's see. 1 year. Let's see. Year to date. What is wrong with this picture? These guys are growing like crazy and the stock's not moving. Ben 10, are you seeing what I'm seeing? Love to see your comments on this. Why is this stock growing 277%? And the market's like, whatever. No big deal. Not that important. And I'm being sarcastic, but boy, man, there's a disconnection here. Let's keep looking because this might be an opportunity. How is this stock not going up? I mean, what does a company have to do? Growing 277% and not have its stock price rally? That's a little nuts. No, it's not a little nuts. It's a lot nuts. Gross margin, 63%. Okay. All right. Profit margin, 50%. And why is cash flow down? There's a lot of moving parts. So, but this is really interesting. You got my attention because the stock is not in rally mode, but their revenue is just moving. It's growing so fast that if the market's not paying attention, this might be a nice opportunity. Let's take a look at the forecast. We've got no analysts covering this company. So we don't have any price targets. We do have analysts that are looking at their growth, and they're supposed to continue to grow this year and grow next year. Now, if this source of power is successful, I wouldn't see why they wouldn't put more of these out there. They just have to make sure the ships don't wreck into them, of course. But looks pretty darn good. All right, so we've got a company that seems to be mispriced. Let's I want to take a look at their website, and I want to look at their actual financial statements just to make sure I'm seeing everything that I should be seeing, and looking at their financials to see what's going on. Okay. All right. So this is their earnings announcement. Let's look at their presentation, and then I'm going to find their financials, their income statement, and their balance sheet, their statement of cash flow, especially that statement of cash flow, because that seemed really interesting. So this is in Europe and other places. They're biannual, semi-annual reporting. So every 6 months they report. It looks like that's what they're doing. That's why it says H1. These guys reported. So financial performance above expectations. Okay. Windkeeper delivered long-term contract. Vesta secured. Okay. 7 vessels on hire around the world, including 2 vessels in Taiwan, 2 in North America. So they have this specialized equipment. Man, look at these boats. It looks like they prop themselves up on the seafloor, and then they're able to construct these propellers, these wind turbines, and then capture that energy and put that energy into the grid. All right. What an interesting company. And here's their ships. So this is a little bit of a shipping company that is building and creating things. So it's a construction company. They're building something. But this is a real unique situation. Now, I'm seeing stocks like Okla. We're going to see that later. It's a company that is trying to figure out how to use nuclear fission to create energy. They don't have any revenues, but they're already up to a $20 billion market cap and they have no revenues. It's like a little bit crazy. And here you have a company that has the ability to install some of these wind turbines, clean power, probably put these turbines, populations tend to live near the coast. So they could probably install them, for example, near Virginia, and that's where we have the most number of data centers. So it might be a really good situation there. Maybe even like Texas has a coastline, California has a coastline, just a lot of coastline to work with. So very interesting. Glad you brought this up. This is what I love about the community. You guys think of stocks that I would have never looked at Cattler, but now you got me hooked. Can't let go. Got to figure this thing out. Maybe there's a nice little opportunity here. So we got a backlog. And I'm seeing some names that I am familiar with. Does this look familiar? GE Vernova. These guys are red hot. So these are projects. Okay. And then Equinor is the energy company, I think, in Norway. Okay. Siemens. Interesting. Here's their backlog. And I'm really liking this company. I see Mike's got some comments there. I'm going to read your comments, Mike. And Mike, I've got LNTH. I'm glad you're on because that's going to be our next stock. I had it on my list and we're going to cover that next. All right. So, all right. You got me interested here. Let's talk financials. These guys report in the euro. I think that's a symbol, right? So let me take a quick peek at, so this is in US dollars, financials, euro. Yeah, we're dealing with the euro. Okay, so revenue, we're up to 233 million euro. Cash flow from operations, 51 million. Now I'm willing to bet that this thing, they're putting a lot of capital into the business because they're growing so darn fast. I'm cool with that. If you're growing like a weed and just got to put some money into it, got it. Okay, looks good. Balance sheet. All right, cash. We've got 53 million euros. Okay. And Where's our debt? So that's equity, current liabilities. So they didn't break this out very much. So we're still going to have to find their financials. So here we go. So capital expense, CapEx, they kind of shorten it. That's capital expense. Money they have to put into the business. Now, these guys are not spending capital aimlessly. They are growing like crazy. So putting capital to work makes total sense. Here's their commitments, and they're trying to deliver on those commitments, and they have to put in their capital. So it looks like, so they have net funding. So this is their whole journey of delivering the right capital to make the growth work. Looks good. And they're going to be financing it. They're going to be taking out debt. They're going to keep growing fast. They're going to be about 588 to 628 in revenue. Okay. So this is their competition. These guys are the leaders. Okay. Okay. So if I'm lucky, nope. Very interesting. So we saw that. Now let me try to find their financial statements. I need to get to some real financials. Enough of that fancy talk. Show me some hardcore numbers. We got revenue. Here we go. Okay, so revenue, total assets, equity. Again, they have total liabilities. Is that debt or these are not financials? So let's see. Interim. Well, I'm not finding their financials. They are going to be taking on debt. So let me go back to stock analysis and see what their balance sheet looks like here. Okay, so we got cash is there. So they got, here we go, long-term debt, 205 million. Okay, so, and it's actually, yeah, we'll call it 205 million. No, that's a billion. So it's going to be plus 1 billion, $11 million. So together we got 1 billion, $216 million of total debt. Again, they're spending that debt to create this business that is red hot. Okay, got it. Okay, so we're there. Now let's go to cash flow because I got to figure out. They're not going to be spending capital forever. See this CapEx? They spend almost $1 billion in CapEx. They're not going to do that forever, I wouldn't think, because they've been building this business. At some point, they're going to be like, okay, we don't need any more equipment. We can just go ahead and start harvesting cash from the business. So what I'm going to do is I'm going to use 60% of cash from operations as a logical run rate. And that's my decision. That's what I think would be rational, because their business is just growing so fast, right? They have to put the capital in to be able to get these projects completed and so forth. Okay, so I've got some things to work with here. Let me look at their share count. 350 million shares outstanding. Okay. The market cap 1.83 billion. Jeez. Okay. All right, we're good with that. And what kind of earnings per share did these guys have? Did they turn a profit? They did. Look at that. Makes sense, because when you do capital expense, you're capitalizing it. So it's not going against your income statement. You get to use that equipment for 5 years, 10 years, 20 years, however long that equipment lasts. So you just deduct the depreciation of the particular year. So the earnings per share is 66 cents. Now they're booming. They're growing fast. So that's going to be interesting to figure out what kind of growth rate we're going to go with there. Let's see what analysts were willing to put out there, because analysts were willing to put their 2 cents into the growth of the company. The company is going to grow quite fast this year, continue to grow fast next year, grow 2027. They're going to be over $1 billion of revenue in 2027. No, actually, they're going to get there in 2026. That is fast, folks. And see, their earnings per share is just going to expand fast. Wow. Man, what a cool business. All right. So let's put this in a valuation and see what this business would be worth. So I'm going to compare this. I don't have a company like this. Never seen a company like this. So I am going to make room to put a nice model in here, and then we'll take a look. Okay, so, and I did something wrong there. Let me correct it. There we go. There we go. Perfect. Okay. All right. So I'm going to update this stock and CDLR. And so this is in US dollars. This is going to be in US dollars. Okay. So before I proceed, I'm going to look at the comments, because I have a feeling you guys have some pretty useful information here that I want to take into account as I look at my valuation. So Pierre, good to see you. You're interested in DLO. Glad to cover it. $5 super chat. Let me know. And then, yep, chart looks crazy. Yeah, I'm right there with you, Mike. This is why I'm like digging in here, because the market sometimes doesn't pay attention, right? And here we are. Carlos, good to see you, sir. Thanks for joining. So Ben, you think they're discounted by like 50%? I agree with that. Yeah, you got it, Mike. And keep in mind, I'm going to do LNTH after this. So if you can, come back and watch the recording. Thanks for stopping by. All right. So, all right, cool. I'm caught up on comments. Let's keep rolling here, because this is, man, this business, it's quite incredible. Okay, so this business is in Denmark. I'm in the United States. It looks like a very interesting business. It's got some debt. It's really racking up the debt. So I'm going with an 11% discount. If it was a low risk company for me, I'd think about 7.5, 8% as a discount rate, but I'm going with 11. Now, as mentioned, the free cash flow, this is where, determining the value of a business is art and science. Of course, all the math, science. But here's where I have to make a decision. This is a call that I'm making. I'm going to take their operating cash flow. I'm going to take 60% of it. Say, hey, they're not going to spend that kind of money forever in CapEx. At some point, they're going to start using their own equipment and, they're going to stop buying equipment. And that equipment will be available for like 5, 10, 20 years. And they will be able to be really, really profitable and generate a lot of cash flow when they begin to have that sustainable growth, high growth, but they have the equipment to do the work. They don't have to keep buying equipment for it. Now they're going to grow fast. So, So I'm going to grow. I'm going to have two growth rates because these guys are growing so darn fast in the first and second year that I'm going to have a growth rate for the first and second year. And then I'm going to have growth rate for years 3 and 4. Then I'm going to have long-term growth rate. So the first 2 years, I'm going to grow by 50%. Okay. And I think that might be conservative because they are just booming. Let me think about that number for a second here, because I'm feeling like it's not enough. These guys are booming, like 260% growth rate. So let's kick it up a notch, 70%. And then they're going to really start moving into years 3 and 4 with a lot of momentum. So we'll go with 30% in those years. Long-term growth of 5%. The need for electricity is massive. No, I don't need to convince anybody. You've got valuations for nuclear companies that don't even have a product, don't even have the ability to create nuclear power for the next 5, 10, 20 years. And their valuations are through the roof. Just if you can create power, and these guys can, and these guys can create it in a clean, use case, man, I think it looks pretty darn terrific. Okay, so we've got the growth rate, and that's where we landed. We've got cash on the balance sheet of $53 million. We got a lot of debt to deal with. All right, no problem. We understand why they spent the money. And shares outstanding, they had $350 million shares. That doesn't look right. Let's take a look here. Let's see here. So we've got, so this is a market cap of 1.83 billion. So what is not going right here? So the stock price, $20. So I think the share count that they're putting, and this typically happens with international companies on this website, is it gets the share count incorrect. So no worries. I know what to do to correct it. All right. So all right. So Based on free cash flows and earning a rate of return of 11%, the stock is discounted by 38%. Now, earnings per share were at 66 cents per share. PE, this is a growing business. I think they should be recognized as a clean energy company, and they're going to be growing that very fast. So, in general, these guys are discounted, and I'm amazed that the stock market has not gotten excited about this business. I think it's a really exciting situation. Now, this valuation takes an imagination, right? And experience in dealing with companies and so forth. But for me, this is a really neat company. I think it's worth the risk and a pretty good investment in my book. So I'm going to put this guy on my watch list. I'm going to think about buying some shares in this company. I think the need for power is there. These guys have a means of creating that power, which, I mean, it makes total sense. You get these wind farms on the coast. A lot of people live near the coast, so they could use that power. So I really like this company. I think it's a real good one. And I appreciate you bringing it up. Hopefully you found my analysis interesting. And good luck with this stock. Thank you, sir. Good one. Man, we're off to the races. So I really appreciate when people bring these small caps to the live streams and the member calls as well, because we really uncover some interesting businesses for sure. This is one of them. Another smaller stock is going to be, we're going to move to a different company now. And I'm not currently looking at Lanthium, so I am going to start an evaluation for Lanthium, which is a healthcare company. It's a smaller one. Let's take a look at the stock. I stopped looking at it a while back. I know I analyzed it in the past, but time to do an update on Lantheus. I'll tell you about the company in 1 minute. All right. Put in the So this is a smaller company. So I'm going to go with a 10 discount rate. Now let's take a look at the business. I could introduce you to the business. So Lantheus Holdings develops, manufactures, and commercializes diagnostic and therapeutic products that assist clinicians in diagnosis and treatment of heart, cancer, and other diseases worldwide. Company offers Definity, an injectable ultrasound enhancing agent used in echocardiography exams, technetium generator for nuclear medicine procedures. Okay, so the whole treatment of cancer. Now, what hasn't been good is most definitely the stock is just really sold off. I think I became worried about this stock maybe 6-9 months ago. I stopped watching it. I just took the valuation off my sheet and decided, yeah, this one's not going places. I think the lack of growth is my number one issue. I oftentimes say the top line growth, it tells you how much momentum does this company have? Are customers really liking the product? Do they like the service so much that they're buying more or they're paying a higher price? You're attracting more customers because your product is that good. And in this case here, we're not seeing momentum. We're actually seeing a decline in sales in the most recent quarter. All this is bad news. This is a stock that was trading when it was growing at 119% as a growth stock, but not anymore because it stopped growing. If it doesn't grow, it doesn't get the valuation of a growth stock. Now, they do have pretty decent gross profits, and they They have good cash flow, 431 million. They have profit margins that are very good. Just that growth line, that's where the problem starts. Growth is very important. The type of investor that you are. I like growth stocks. Growth stocks tell me that business is continuing to win over new customers. It's going to get stronger, bigger, and that's the type of stock that I'm looking for in most cases. In some cases, I'm okay with a slow grower like a Kroger grocery stores that I'm an investor in. That's a safe stock. This is not a safe stock. This is a pharmaceutical or healthcare biotech stock that if it's not growing, the market's not going to be excited. The margins are good. Free cash flow is good. Now, it's not going to grow, but we'll see where it values. The stock has been suffering 53% down. Holy smokes. That must be terrible for investors. So they got 67 million shares outstanding. When we look at their balance sheet, they should have no debt. They have cash of 695. And they have debt of 615. All right. Okay. Now let's take a look at what analysts are thinking for Lantheus. Now, some analysts are very optimistic, and an analyst has a price target of $143 a share. The lowest price target is 63, which is still substantially above its current stock price. So they believe it's really discounted. Now, healthcare has really been beaten up especially in 24, early parts of 25, but it has been doing quite well over the last, call it 2 months. Now, these guys are going into a contraction, then they're going to grow slowly. They're expecting to grow some in a couple of years. This might be a nice stock to buy, but maybe waiting and seeing if they can execute on this growth might be a good idea. The earnings per share look good, really high earnings per share, but they don't have a lot of growth expected. Only 3% growth on the earnings per share. All right, so I've got the numbers that I need for the valuation. I got an impression of where the business is at. It's a slow grower. So let's take a look and do a valuation. So this guy here, we're going to go with trailing 12 months plus growth. This one's going to be pretty simple. Now, growth, I'm going to grow them at 5-6% for the next couple of years. Actually, that's too optimistic. I'm going to go with 4% across the board. They just got to prove that they're a grower. If you can't prove you're a grower, it's not going to be a pretty picture. It already hasn't been a pretty picture. It's been pretty ugly for investors. So they got to start growing. I'm sure the management team knows that, hey, the market, they want to know if we're going to grow or not, because if we're not going to grow, they're going to not be excited about our stock. So the value of all those cash flows discounted by 10% is $6.9 billion. When we look at the cash on the balance sheet, we've got $695 million of cash on the balance sheet. We've got some debt, $615 million of debt. We're still and let me update the share count before I make the next statement. So we have a discounted stock on cash flows. These guys are making a lot of money. They should start growing in a couple of years. They really deliver that growth. This would be a terrific investment, but I would not be overly eager to jump into this guy because it might take a little while for the stock to really start to rally. These guys here are not growing a whole lot, so I'm going to give them a 12. Yeah, zero is fine there. So Lantheus is discounted, but the market, as you have observed, is not excited about this stock because there's no growth. There's other healthcare stocks that are growing quite well, and I think those are getting the market's attention. Now, this should be a terrific watch stock, and if it begins to grow, if it executes on that growth plan, snatching up shares would be a good idea because these guys are making a lot of money. They might even acquire other businesses if they have that kind of cash flow. So these guys are, for me, it's a watch stock. And maybe in a year's time, it'll be ready for prime time, be a good one to keep an eye on and invest at the right time. Remember, successful investing is not about simply finding a great business, buying it, paying whatever price. That is not good. You want to find a great business and you want to buy under terms, conditions, and prices that you think are advantageous to you, the investor, so that you can make a very, very good return. So Lantheus is right now discounted, terrific, but I don't want to, I don't want my capital to sit around for a year. So why don't I wait? I don't have to buy the stock to watch it. I'll just watch it and then at the right time, buy some shares. There's nothing wrong with that. So that is Lantheus. All right. So we covered 2 requests already. We went over Lantheus and CDLR. Thanks for the suggestions, guys. 2 real good ones. Now let's move on. I think I mentioned early in the stream that we've got some stocks that make me think we are near a top here, folks. We got Oklo up 28.83% on Friday. We talked about a nuclear production company, or at least the engineering construction company that installs these wind turbines to generate power. And these guys, Oklo, would like to develop advanced fission power plants. They don't have any revenues right now. 0 revenue. When are they going to start making money? Just generating revenue? I don't know. But right now, they're just spending money. So investors are really excited. Hey, these guys are going to be worth a lot because we need a lot of power. Got it. But boy, that's a big risky proposition. What if they never make it to revenue? What if they get to a revenue point and this is so expensive, they don't make any profit? They don't make any cash flow. They're indebted. Competition for power generation has a better option, less expensive, and all kinds of good stuff. So this is just overly risky in my book. I would not touch this. But those that did invest, I mean, they're probably, enjoying the big rise. This stock is shorted by about 11% of the shares are shorted. I have to think that it's going to go up. This is probably going to be a highly shorted stock because it's just really irrational, in my opinion. Analysts think it's priced way too high. And they're at some point in 2027, in 2 years, they'll start generating what they think is about $5.46 million of revenue. Okay, that's like a drop in the bucket of how much capital has had to be put into this business. So I think investors are really, really going in deep on this one and really going into a highly speculative and risky investment. We'll see if it works out for them. For me, staying clear of it. I'm making lots of money. I'm making it on businesses that I understand. And I feel like I'm making a really wise investment, buying really good businesses like Google, Meta, buying them at discounts when the time's right, and then seeing that capital work for me, work 24/7, 365 days out of the year to keep growing my wealth, to empower me, empower my family, to have a portfolio of stocks that just is flourishing. It's like those wind turbines in the middle of the ocean, generating power. just by the natural movement on the wind. My portfolio generates appreciation and value for my family. That's what I want. And buying stocks under the right conditions is really important. If that's interesting to you, you're in the right channel, you're in the right live stream. I encourage you to get involved because that's what we do here. And we've been having a phenomenal year, awesome year, best year of my career. And last year was my best year of the career, investing career. Year before that was the best. So I just keep, the portfolio just keeps getting better and better. And I think I'm getting better because I get to work with you guys. You have really good ideas on stocks. We collaborate on them. We get on Discord and we, talk about, ideas on companies. Some companies don't look good. Like we went over Lantheus. I think that one's a sick puppy. Might need some time to heal up, get healthy before that would be a good investment. But some like CDLR look pretty darn interesting. And I would have never thought of that company. So I'm glad that Ben 10 brought it up. All right. So let's keep rolling here. Out of the corner of my eye, I'm watching the Denver Broncos play the Los Angeles Chargers. Broncos are leading the Chargers by 7 points, but the Chargers are trying to come back. We'll see if they pull it off. All right, so next stock that I'd like to take a look at, went over Oklo. Let's take a look at some of the most popular stocks. And the top one was that tobacco company. And I meant to drill into it because this has been on kind of near the top of the list for a couple of days. EVO. Hello, sir. Thanks so for being a new member, by the way. Really appreciate it. And let's see your question here. So you're new to investing. Any book recommendations? Yes. So my favorite book is Pat Dorsey's Little Book on Investing. If you read that book is in essence what I do. It's what I do. That's what I've been doing for 20 years. And it's interesting that I read Pat Dorsey's book a couple of years ago. And when I read it, I'm like, this book was like written for me based on the stuff that I believe in. And it's stuff that I think Pat Dorsey, because you think about where our knowledge came from for the type of long-term investing that I do, which is finding great businesses that are discounted that I feel are going to have a terrific future. Pat Dorsey really does a lot there. And I would encourage you to take a look at his book. He also has he's not very public, but he does, there's some recordings of speeches. And in those presentations that he's done, he summarizes his book. He makes it really easy. So take a look at his book, and it's a real good one. And of course, now I'm educated up to a master's in business, and my undergraduate is in business with an emphasis in accounting. So I'm an educated guy, but I would be the first one to say that my investing has really flourished during the era of YouTube because I get to hear other investors really describe stocks, how they evaluate a stock for value. So I would obviously encourage you to keep watching these streams, get involved with this channel. There's a couple others that are really good too. Scott's Due Diligence, very, very good place to get valuations. And on morning streams, you'll see me look at the valuations, intrinsic models, intrinsic value models. And we've got Daryl who looks at the charts. So, what's great about investing is the late Charlie Munger, he was 99 years old when he passed. And you look at his life, man, what an incredible life. He lived to live to 99, right? You'd probably say, wow, that's longevity. Awesome. Great job, Charlie. But he amassed a fortune, like $100 billion fortune. And he did it using the principles he read, believed in from Benjamin Graham. Now, if you, if, what I try to do is in the heart of Benjamin Graham's philosophy, in the heart of what Charlie Munger, Warren Buffett have done, with a very modern twist. I really like technology stocks. I really like companies that own the future. So that's how I invest. And I think Charlie Munger was a little more like me than Warren Buffett. Charlie Munger was in Alibaba. He's the one that convinced Berkshire to get into BYD, which ended up being a genius investment. So Charlie was really, really good. And so that's the kind of investor I am. That's what we do on this channel. And what I was going to mention is if you're new to investing, awesome. I assure you that if you put in the effort to learn and you just keep learning, every month you learn something new, every year you get better, you will attain knowledge and skill to empower yourself, and you will make more money than you expected to make. That's been my experience. And I just don't see how investors would not accomplish that if they really do apply themselves, because the access to information, the access to knowledge is incredible now. We got YouTube, we got Discord, we got all kinds of ways to engage with like-minded investors. And you really accelerate your experience, you accelerate ideas on what to invest in. So it's great to have you. You're one of the newest members, and I welcome you. And I thank you for being a member, sir. Grape Soda, Little Book That Builds Wealth. That is the title. Thank you, sir. That is his book. And Pat Dorsey, for a long time, he was an analyst. He was one of the best analysts that there was, period. He was like one of the best. And then he started his own fund. He's been very successful. YouTube University is where it's at. Let me add that this year, it's been a number of years, but this year especially, the retail investor, sometimes CNBC will call us the dumb money. We've been beating Wall Street. We've been beating the educated institutional investors, beating them soundly. You look at the big dip we had in March, April. We leaned into it. We bought into it. Now we're flourishing, just seeing massive gains. And that, I would say, is a direct connection to YouTube University, Discord, Reddit, X. It's that, we have the access to the information on these great businesses, and we are that much better, the retail investor. It's just going to get better and better for retail investors. So if you're really into investing in stocks, needless to say, you're doing it at the right time. If you were doing it 5 years ago, it was the right time. 10 years ago, if you're amassing savings and figuring out what you're gonna do with that capital, that decision in life was a wise one. But it's just been a really fun, many years. But it's getting funner and funner because we together, working on YouTube, working on Discord, we are getting ourselves into better investments and getting better returns. I just don't see it slowing down. So, all right, Grape Soda. I do invest in real estate, sir, and do quite well with it. Have done quite well. And you got the right path. And again, I'm gonna triple down on find YouTube channels that really are good places to learn, that are, in my opinion, have a lot of good analysis to them. It's not just, somebody saying, hey, I like I like this stock because I like this stock and I'm going to buy it. Well, that's not enough. I don't invest on stories. Stories could help a stock, most definitely. But I love it when everything is perfect. Like the company is going to grow. They're going to make a lot of money. They're going to generate a lot of cash. They have a terrific balance sheet. It's a very sound business and they have a grasp on the future. So, um, maybe read a book or two, but apply yourself on YouTube. And I think you'll be unstoppable if you really apply yourself and keep learning and keep, investing is about knowledge and it's also about skill, right? Um, you can have all the knowledge in the world, but if you don't apply it, it's worthless. But applying it comes with, that's where the rubber hits the road. You got to make some decisions, buy stocks, sell them, and so forth. And that's where skill comes in, being an investor, knowing when to buy, how to buy, what are the terms that you're getting, and then making sound investments. So a lot to learn. You're doing yourself a big favor by investing your time and energy in learning. So you don't make an insane salary. Nice. You are getting it done, sir. Your investments make more money than your salary. I salute that, sir. You're doing the right thing. Yeah, it's fun with the community. And it's also, I'll tell you, when the big dip happened in March, April, it was good to have like their strength in numbers, right? We were on member calls, we were on this stream, and we were looking at it and we were processing it and saying, man, this is looking like a good opportunity. There's some really good names where the prices have gone down. Reddit became a fantastic opportunity. I jumped on it. Astera Labs, there was like a 12 pack of awesome stocks that I made a lot of money on. And that's the strength in numbers. It could be quite scary when you see, in the case of 2025, the market really sold off with the fear of tariffs. But, when you surround yourself with like-minded people, we tend to kind of be rational, behave rationally and say, man, the market's going to bounce back. It's, we have a shock on tariffs, but those tariffs aren't going to touch Meta. So Meta became an automatically buy Meta, buy Google, buy Reddit. There were stocks that were not going to be touched by the tariffs, and those became immediate great opportunities. So yeah, so it's fun and there's strength in numbers. So Zubio, you got a stock there. Love to check it out. $5 super chat, sir. Yep. Good to see you, Kurt. Good to see you on the stream. All right. Good chatter there, guys. Thanks for bringing that. Let's talk a little NVIDIA. NVIDIA, of course, is the most valuable company on the stock market. What's been going on with these guys? Last month, down a little bit. No big deal. These guys are up 31%. So we're seeing this plateau up here. These guys, of course, have just killed it for the last 5 years. They've had some pretty good sell-offs. This was amazing that they went from 94 to 176. One more time, NVIDIA is amazing. And these guys value quite well, but I think they're priced a little too high. It's unbelievable that they're at $4.290 trillion. Their P ratio is getting a little high, 50, 31 for next year. And analysts still really like the stock, understandably. They are a growth stock. Incredible. When's their next earnings? So their next earnings is on November 19th. So it'll be in 2 months. And I am sure we'll be doing a live stream to cover NVIDIA earnings. Because last time we did that, we had like 3,000 people on the live stream. So a lot of interest in NVIDIA. Now, these guys, as they have tougher compares, the growth rate is going to come down. Like in this case here, Q2 was compared to Q2 here, 30 billion. But, each quarter gets a little harder. So the growth rate keeps coming down. It's still phenomenal growth. But it's just going to be, not as incredible growth in the future. And if there's a pullback on spend into these really expensive semiconductors, that will also have an effect on their growth rate. So, NVIDIA's numbers are fantastic, superb, excellent, awesome. But just the stock price has gone so high. It's pretty incredible. They do carry a ton of cash, 56 billion. Debt is only 10 billion. So they're just doing great. But their stock price is expensive. What are analysts thinking? Let's take a look here. I'd love to see their forecast. So analysts think it's being priced at a 15% discount. Now, analysts are saying that this is going to become a slower growth company. You see that here, right? And I think this is where maybe the market treats us like Apple, because I think Apple for 3-4 years has been a slow grower and the market's been okay with it. It's maintained its market cap for the most part. Will this have the same kind of path as Apple? Maybe the market will be like, yeah, we don't care that they're not growing as much. We'll see. It'll be interesting to track that. Now, if this becomes negative, like there's a real big pullback in CapEx, that'll be interesting to see how that plays out. I'm going to be a spectator because I'm not invested in NVIDIA. I don't own any shares. And I actually think this stock's priced too high, and it really found it hard to get into NVIDIA because the stock's always trading at a really nice premium. Right now, not so bad, a 23% premium, meaning I think each share is worth $136, but the stock is trading at 176. So I don't want to pay a premium on a great business. I want to buy under a price and terms that I really like. So right now, I wouldn't buy it. So that is NVIDIA. All right, looks like some comments come in. Let's see here. What moves are you likely to make when the market has a big pullback again? So the way I would answer that is before the market makes a move, I'm going to sell some shares. I'm going to probably pick the weakest stocks and just pull shares from there and create more cash. I do have some cash right now, but I'd like a bigger cash pile because I'm having a really good year, and that will enable me to lock in my gains and have capital for the next pullback. So that's how I'm dealing with it. So you want to take a look at DHER. DHER. We'll take a look. I could be mistaken, but have you analyzed DFDV? I don't think so. We can look at it. Maybe I have, but it doesn't ring a bell. They likely would become more profitable. NVIDIA would become more profitable, but that's where it's interesting to see how the market will react. Will that be positive or negative? They're like, hey, the market is it going to accept that NVIDIA is going to be a slow grower with higher profits? Yeah, maybe it will. For sure, it'll have that, the stock will be appreciated by many because it's been so incredible. So I think it has a couple of years of staying nice and high, but we'll see where it goes from there. Yeah, I don't think anything big's going to happen with NVIDIA for a couple of years. All right. So we got a couple new suggestions, DHER, DFDV. And just a reminder, if you're out there and you're not a member, no big deal. You can buy a $5 super chat and I'll review a stock of your choice. If you become a paid member, You get to nominate stocks, just as part of your membership. No big deal. Um, you go to the homepage, look for the join button, look at your options there. And the value investor on live streams, you can nominate stocks. I look at them, we talk through them. If you become an advanced investor, you get access to my tool set that I have used here on the live stream to research stocks and determine a value on them. You also get access to the Discord, and you get access to other tools as well as the repository of my valuations on stocks. Super investors, now we're talking about one-on-one calls. You can actually send me a stock symbol and I'll do full analysis on that stock symbol. And then platinum, you can send 3 stocks. We do the complete research on those stocks. And you get real-time access to my trades. You get real-time access to my investing plans each week. So take a look, see if there's an option that you would be interested in. Now let's get into the next stock is going to be DHER. Is that Delivery Hero? And where's Delivery Hero? Are they here or here? Well, Germany. Okay, cool. Let's take a look. So Delivery Hero offers online food ordering, quick commerce, and delivery service. The company offers its services under Pedidos. And sorry, I'm not German. Okay. So we have DoorDash in the US. We have Uber Eats. Got it. Delivery Hero. I like these businesses. They tend to be high growers, high profits, high cash flow. Let's see where this one lands. Before I do that, let me take a peek. These guys are in Germany. This is what they're all about. It's interesting that the branding is a lot like DoorDash. Okay. All right. I like these businesses. I own Uber Eats, and I own DoorDash, and I sold DoorDash just to concentrate my investment in Uber. Made good money on DoorDash. DoorDash has been phenomenal stock. Delivery Hero is much smaller cap than DoorDash or Uber. It's only 8.22 billion, and this is in euros, which is pretty close to 1-to-1 with the US dollar. Revenue 13.4 billion. All right. Forward P is 34. When we look at their financials, we've got good growth. So this is in euro, 23%. That's pretty good. Pretty good growth. They report semi-annually. So the growth is good. And let's see, their gross profit. They're not very profitable. That's interesting. They have good cash flow. You see their gross margin. It's low compared to DoorDash. DoorDash has very high gross margins. Uber has higher gross margins. These are pretty low compared to DoorDash. And it leaves very little profit, very little cash flow. Okay. All right. So let's take a look at this stock. We'll do a valuation on Delivery Hero. I think it'd be a good one to take a look at. So let me grab a few numbers from here. So free cash flow is looking good for the trailing 12 months. This is going to be in euros, I believe. So 774. And shares outstanding. So it is. All right, got their shares outstanding. Let's take a look at their debt and their cash. One thing I haven't pointed to, because the balance sheets have been good so far, is these guys have a little bit of debt. So I can make the point on this one. So they have cash of 2.81 billion euro and then 4.64 billion of debt. Okay. And their debt to EBITDA is 8.99. Now that is a surprise that it's that high. Why is it that high? So yeah. And it's their, remember how I mentioned that they have very low profits, their gross margins are low. It leaves very little EBITDA, earnings before interest, taxes, depreciation, and amortization. And what that number represents in general is the number of years it would take to pay off debt. And this is way above my limit, which is 3. It's way, if you're above 3, it's really bad. If you're below 3, it's very good. If you're at 9, that's very, very bad. So this would be a disqualifier for me. I'd be like, yeah, I don't want to buy into this. Too much debt. So, but we'll do a valuation anyway, just to see where we land. Okay, so we got, okay, good. Okay. All right, so we've got those numbers, and I just want to look at their earnings per share and see where they landed here. Earnings per share, they've been negative, but it's supposed to turn positive. I don't have a projected earnings per share there. Yeah, so I'm not going to be able to do a valuation on earnings per share, but I can do it on free cash flow. This one here, just because of their balance sheet, I have to wait for their balance sheet to heal up. It would not be an investment for me, but let's see where the cash flows value. And another reason why I wouldn't buy into the stock is because I could buy DoorDash. I could buy Uber. Why take a big risk over with Delivery Hero in Germany? They have a lot of debt. They don't make as much profit as DoorDash or Uber. So I'd rather invest in DoorDash or Uber. So that's a reason why I'd probably be out on Delivery Hero. But let's do a valuation and just see where it lands. See what potential value could be there. But again, that balance sheet is too risky for me. They got to reduce that debt. All right, so let me update my dates here. And the symbol was DHER. So I'm going to go with a 15. It's a pretty high discount rate because these guys have a lot of risk. Trailing 12 months. They have $774 million of free cash flow. They are growing nicely. So 15, that's what DoorDash had. That's fine. And 4%, that's fine too. Okay. So on this number here, I'm going to go ahead and add that growth. All right, so we get to an intrinsic value of 9.4 billion. We had some cash on the balance sheet of 2,810,000,000, and I'm going to change the currency to euro in a minute. And then debt 4,640,000,000,000. All right, so we've got that. Shares outstanding. So based on cash flows, this thing is actually priced too high. And I mentioned my worries about this stock and the fact that you could buy DoorDash, you can buy Uber. There's good choices in this market. They don't have any earnings per share, so I can't fill out this section. So I'm gonna just delete this and get it off the evaluation. Now I'm gonna change the currency here to euro. And so number euro, that way we know this is a euro. All right, so all right. So yeah, this one here just there's better options for me than Delivery Hero. Wouldn't be good investment for me. And appreciate you asking. You got to make sure you look at that balance sheet because the balance sheet tells us, these guys, that debt can really be a big problem for a business. They have to make those big interest payments, and it could really hold a business back instead of them focusing on, how they could just continue to improve as a business. So for me, it is a pass. I'd rather invest in other businesses. So thanks for asking about that. All right. So just wanted to make myself a note to come back and update that. Now, what happened there, folks? Did I just close all my? I'm back. Sorry about that. And share my screen. That looks good. All right. Can you guys hear me okay? Just doing a sound check. All right. So Ben 10. Yeah, it's about, making sure that the balance sheet also looks good for a business. You don't wanna have a business that has a terrific, thing going, but the debt just really, really hampers the business, so all right. Alright, so let me back up a little bit, and let me open a few browsers here and, get myself ready to take on the next question. Alright. Okay, so we're gonna go over DFDV in a few minutes. Alright. Saeed, good to see you. How are you, sir? Good to see you. German DoorDash, yeah, that's what we just covered. What's my riskiest position? Um, well, at times, right, like, Astera seemed like a really risky stock when I bought it, but it really paid off. It's a younger business, um, but I try to stay away from really indebted companies. That just is not good. They got themselves or they're over poor decisions or just the business isn't very good. So I'd rather just stay away from businesses like that. So, all right, let's go ahead and handle DFDV. So this is Defi Development Corp, and these guys operate an online platform that provides data and software solutions that connects the commercial real estate industry to multifamily and commercial property professionals. The company offers Janovo Pro, which provides an online matchmaking service where browsers or brokers can get loans, lenders to get financing. Okay. So these guys are doing software that helps the real estate industry. Okay. All right. So this is their business. The things that I don't like is they have a limited addressable market, and uh, that could be a problem. Now, let's go ahead and take a look at their fundamentals. So this is market cap is 434 million, revenue 3.52 million. Okay. P ratio 14, that's really low. Wow, analysts think this is really discounted. What's been going on? Yeah, I think can you guys hear me better? I'm not sure what happened to my audio, but I'm gonna try to keep going. I clicked on my screen and I think I ended up closing all my browsers, which I didn't mean to do. So hopefully you guys can hear me okay. Ben 10, is that better? Let me know. All right. Big house, let me know if the audio is okay. All right. DeFi Development Corp. Um, these guys, okay, perfect. Wow, these guys are tiny. So these, if I'm reading this right, this is millions. They're a $3.5 million revenue company trailing 12 months. 2024, they were 2.1 million. So really, really small. Okay. So this is tiny. They burned quite a bit of cash in the trailing 12 months. And it looks like they're just providing kind of an online referral system. So that's why they're so profitable. And what's their market cap? 434 million and 3.5 million in um, revenue. So that means you're paying 120 times revenue. That's really expensive. I think it's because they're kind of just like an advertising company. Okay. So gross margins, 100%. Guess they were. Yeah, it looks like they're more like an advertising company, similar to like what Facebook does, right? They don't really do anything. They have people go there and socialize, and then they advertise. And I think that's what these guys do. Forecast. One analyst covers them. He thinks it's really discounted, and it looks like they're going to keep growing. They're still going to be small. Eventually, they like 8.67 million, which is very big. So this one here is just too small. If I was going to invest in a small business like that, I would have to be personally involved. This is just too, and this is a big valuation. That's very little revenue, and you're paying 434 million in in market cap. The stock before March, it was like really doing nothing. It was less than $1 stock, and then the market got really, really crazy with it. So this is not an investment for me. This is way too risky, way too expensive, way too everything. So I'm not touching this one. Fall's great. Good to see you. DocuSign. Give me a second to make sure I'm not. All right, got it. Yeah, let's take a look. So DocuSign is a really good quality software company. Now, if you're familiar with DocuSign, these guys is they're a digital signature capture company, right? If you sign some type of contract or buy a house or something, you're docu-signing, right? And it's really become popular. These guys are the leader. It's got a $17 billion market cap. It's, call it a small cap, revenue 3 billion. And P ratio this year is a little high. Next year is dropping. Analysts think there is a discount available. The stock year to date isn't doing all that hot. For the 1 year, it's doing very well. During COVID, this thing was really well, expensive. But if you waited, you could have picked up stock at a nice discount. That's what I did. I'm sitting on a nice gain. And this year, the stock hasn't really done much, obviously, like, it's down 6%. So this one here, um, I'm gonna show you my valuation. I have a full valuation. I own DocuSign, by the way, so let's go through this. So we've got financials. This is an 8% grower. Their number, $3 billion in revenue. That's a pretty good number. So when they grow by 8%, they're growing about 200 and call it $250 million in top line dollar addition to that line. Over time, and I'll show you the forecast, they're going to become $4 billion, $5 billion company. They have very good profitability. It's a software company, and so they had an 8% growth rate there. Free cash flow is really good. Gross margins are very, very good. They have good profitability. It'd be nice to see them expand that profitability. And free cash flow margins of 30%, which is excellent. Now, this stock, when did they announce? They announced September 4th, so a couple weeks ago. And we have 13 analysts covering the stock. Some analysts have the stock price targets up at 124, 80 being the lowest. So the downside risk isn't very low. I mean, it's pretty reasonable. And you have some upside potential. I like looking at this forecast because the revenue, what are analysts expecting? They're going to keep growing at this clip. So they're going to be a $4 billion revenue company in 2-3 years, in about 2 years. So that's really good. That's excellent. It's a big size business, and their profitability is going to expand nicely. So DocuSign is a good stock. I'm glad I bought it at the right times under the right conditions. And when I look at DocuSign and value it, which I know I have a valuation on it, I see a 31% discount on a quality business. Now, software right now is discounted. There's a lot of good businesses that are nicely discounted, and I'll take it. I own DocuSign. I own like 10 different software businesses, and the small software businesses are really beginning to rally. Like Wix, that's a recent pickup. It's flourishing. So DocuSign, along with Wix and others, are just really getting it done. And this one here is discounted by 31%. All right. So thanks for asking, Fallsgrave. And just a reminder, if you look in the shared folder, you can always look this up. You go through the same path that I just did, and you can come on the live streams and ask me as well. So thanks for tuning in. All right. So Jerry G. Yeah, Instacart's just been getting hammered. And I think it's irrational because I think Amazon's great. I just ordered some stuff on Amazon Friday, and then I got it yesterday, but one of the items never got here until a day late, and I really needed it yesterday. But I don't know that they're gonna do grocery all that well. I think they're gonna do a lot of things well, but grocery has its own quirks. I think, Instacart is still gonna be a good one. Shreyas, thanks for tuning in. That's a tough question to put my finger on. What percentage of cash do you suggest we maintain? I'm not going to suggest a percentage. I would just say that in general, I like to be, for the most part, fully invested at any one time. But as the market gets to these points, I'll sell off some stocks and maybe carry a little more cash. Like I'm going from 3-4% to like 6 to 8%. Um, but that's pretty much mostly invested. So there's no like, oh, you should be 20%, 25% cash. That would be too much, by the way. I think that 10% might be the limit for me. Um, and I have a big portfolio. I have a big portfolio of stocks. So that's how I would answer that question. I also would say that I also have a big bond portfolio, so I could always take money from bonds and put them into equities if we had a big sell-off. So I have like 15, 18% of my portfolios in bonds. So if you add that up, my cash and bonds is a pretty good number, like 20, 22%. All right. Thanks for the question there. All right, guys. So, since I'm having that audio problem, kind of makes me feel like I'm not coming through right. So I'm going to go ahead and end the stream. I wanted to just check in here on the weekend. Tomorrow, we are going to stream, Daryl and I, at 9 a.m. Eastern. And if you have any suggestions for that, either tune in or if you're a member, email me, check in with me on Discord, ask me questions if you'd like, and let me know if there's something you want me to cover on tomorrow's stream. But I wanted to thank all the members. It's been a really great year with having a lot of new members and having people from different parts of the world, tune into the live stream and also the member calls and really come with their ideas on stocks. So it's been a really, really good year, and I appreciate all the members. So with that, everybody have a terrific night. Enjoy the rest of your weekend. Good luck with your stocks, and I look forward to the next stream with you guys. Take care.